Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, well, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing in the stocks within the portfolio on a weekly basis. That's what this video is about, portfolio update. So you'll see exactly what's going on in my portfolio, what I'm buying, what I'm selling, any options that I'm playing with, option contracts that I've written. So if you are into that kind of content, dividend investing is what we focus on this channel. Hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, trying to build a like-minded community here of dividend growth investors to share our stocks in our portfolios, what we're watching, what we're buying, what we may be looking to sell. Just information sharing among the general community. Dividend growth investing community is a great one. So like I said, if you have not done so, hit that subscribe button down below and join us on this journey, and let's all share our experiences together. So let's jump into the video. Like I said, this is a portfolio update. These come out every Sunday. I also have a stock pick of the day series Monday through Thursday, so check that out as well. And we did have quite a bit of movement in the portfolio this week. We did add $1,234 in new capital. A portion of this is actually options. We'll see that. And we actually sold several positions, not one, not two, but three positions. We will see that $16,294. Majority of that was reallocated in the portfolio this week. So we'll see all the buys and sells, and let's jump right in. So we will start out with the first activities options for the week. On May 1st and May 3rd, we had options. We wrote a covered call here for OHI, which is a REIT out of the real estate sector, right? And we wrote that call, so it expires June 16th. It's a $29 strike price, and in premium we received $48.92 for that contract. And then we also wrote a covered call on Kraft Heinz Company, ticker KHC. And this one has a May 5th strike price, right? And it's $42 is the strike price. May 5th is the target date, and $42 is the strike price, sorry. And we received $6.45. So this has passed. That was last Friday. So we'll both keep the shares and keep the premium. We'll have to wait on this one till June 16th to see where it's at. For this one here. But then the last one we did a cash secured put here on Williams-Sonoma, ticker WSM. And this one has a strike price of $114 and a close date of May 12th. So the target date here, May 12th, that's next Friday. If Williams-Sonoma is $114 or less, then we will pick up 100 shares. So we have those funds, and part of that funds is from the sale. We'll see here in a moment of the stocks that we sold, but we put some cash aside to cover this. So for that, we received $179.45 in premium. So all told, options premium, we received $234.82, and this was all reinvested back into the portfolio this week. So cash added $234.82. So that is options on May 1st and May 3rd. Next up, these are the three positions we sold out of, to all total $16,924.57. We sold 48 shares of Whirlpool, actually 48 and some fractions of the shares. They break up the sales a little bit there. So those sell on a different date, but I didn't plug them in here. So these are round numbers, but there's like 48.16 share or something like that. But we sold them at $142. And we received $6,815.93 back into the portfolio. We sold our position, Stanley Black & Decker position, ticker SWK. We sold at $87.55, and $3,852.15 went back into the portfolio. And Both of those sales were on May 1st, and we actually went back in on May 2nd. Leggett and Platt jumped up by 5%, so I took advantage of it. I was up on both of these, Whirlpool and Stanley Black & Decker, down a little bit on Leggett and Platt. It was almost a wash. I ended up down a little bit overall, but whenever Leggett and Platt jumped up by a little over 5%, I took advantage of that one and actually said, okay, this was one I was contemplating anyway, so I sold out of that position and was the largest of the three positions, not monetary-wise. Whirlpool is actually monetary-wise the largest, but as far as shares sold, Leggett and Platt was the largest. So ticker LEG, Leggett and Platt, we sold out of that, a little over 195 shares there at $32.09, and $6,256.49 went back into the portfolio. Now, this does also impact the passive income, right? So we lost all total from these three positions, $820 in annual passive income. So we need to make up for this here. We did not make up for all of it. We did make up for a big portion of it. You'll see that here. So over the next couple of weeks, we'll still be trying to make up for this loss in passive income here. But that is the nature of selling out of some shares. And Leggett and Platt and Whirlpool were actually, I know Whirlpool was a little over 5% dividend yield. Leggett and Platt was, I think my yield on cost was a little almost 5%, 4.6, 4.7. So these were high yielders too. So that hurt a little bit more, but let's keep rolling. All right, and now we're into the more fun portion of the video. Dividends paid out for the week. On May 1st, we did receive dividends from AT&T, ticker T. We received $59.25 in dividends, and that went right back in. We do have the drip still set, so we picked up 3.35105 shares more of AT&T as soon as they paid out. And Verizon Communications also paid out on that day $130.78 in dividends there from ticker VZ Verizon. And we again have the drip set, so it went back right in and picked up 3.36146 more shares of Verizon. All total, this added $12.12 of passive income on this one. And then we had a big purchase on May 2nd using some of the funds from the positions we sold out of. We invested $5,038.71. We picked up 14 shares of Ally Financial, ticker ALLY, out of the financial sector. Picked up those shares for $25.24, and that was $353.31 of the total here. And we picked up a big tranche of Pfizer. I actually tried to sell a cash secured put on Pfizer as well on Monday, but it didn't go through. And this one actually, the dividend ex-dividend date is next week, or I would have probably done one for Friday and tried to get this down in the $38 range, which it did drop into, but I bought another tranche here in a minute. You'll see that. But we picked up 120 shares of Pfizer, ticker PFE. This is down significantly. Anything under 40 for me is a buy on this one, and I was happy to add this back in at that price range. And that was $4,685.40 of that 5,038, and this added $213.60 back into the portfolio of passive income. So there's a big chunk of that 820 that we lost back in there, right? And that was on May 2nd. We weren't quite done. This is where we added most of the new funds as well as the options premium with a little bit more of the income from the sale of those three stocks. So $1,854.58 invested on, this should say May 4th. That says 21. That's probably left over from the April, but on the 4th. And with those funds, we picked up one share of Medical Properties Trust, ticker MPW, at $8.44. We picked up 6 shares of Cisco Systems, ticker CSCO, out of the information technology sector. This is a REIT here, Medical Properties above. We picked up those 6 shares of Cisco at $45.82 per share. We picked up 10 shares of Omega Healthcare Investors, ticker OHI. This is a REIT out of the real estate sector, very similar to Medical Properties Trust. We picked up those shares at $28.53 per share. We picked up 10 shares of Verizon Communications, ticker VZ, out of the communications sector. We picked up those shares at $37.43 per share. Anything under 40 for Verizon is a buy, in my opinion, at least in my portfolio. Ally Financial, ticker ALLY. There we bought another big tranche, 16 shares at $24.49 per share out of the financial sector. There were for Ally. And another one out of the financial sector, Bank of America, ticker BAC. Been adding to this one the last several weeks. Banks in general, as they continue to kind of be hit by the banking issues that are going on. I just don't see it impacting these larger banks here. Seems like it's more of a regional bank issue right now, but you never know. But I'm taking advantage of these dips, and I'm continuing to add to my financial positions. 10 more shares of Bank of America, ticker BAC, at $27.21 per share. And last, we added 4 shares to our Realty Income position, ticker O. This is the monthly paying REIT here at $61.95. Continuing to bring the cost basis down on that one. These were all actually below my cost basis, so I was happy to add them and bring down my cost basis and bring up my yield and potential future income. All total with these positions, we added another $103.63. So we've made up over $300 in passive income. As you can see, $329 with the 2 days that we added income, even from the sale, and then the options premium added in there. So total invested in new capital, $1,234.82. Part of that was the options, and all told, $329.35 back into the portfolio and passive income, trying to make up for that $820 loss still. So let's do a quick recap on this one. All total. Now, you may have noticed there was a difference between the 820 and we hit on the previous page, you saw about 329 added back into it. Well, the difference being here, this cash secured put here for Williams-Sonoma, I have to set $11,400 on the side. So that is currently setting, if this hits $114, I will pick up these 100 shares. So that actually adds a little over another $300. So if you add the 329 plus this 100 shares of Williams-Sonoma when it gets assigned, if it doesn't get assigned next Friday, I will just continue to do a put at 114 or 115 until it is assigned. So I am counting those 100 shares towards my passive income allotment. So all total, really, with Williams-Sonoma plus the previous page, is $689.35 in passive income added. So we lost $820 from selling out of the 3 positions. We added back in $689.35. All total, we're really down $130.65 in passive income. So womp, womp, womp. That's a little negative to see this week. We did go backwards a little bit in our passive income. You'll see that here in a moment when we go to our totals. But I at least wanted to highlight how I got to the number that we're at, right? And you will see Williams-Sonoma, whenever I list out the stocks in my portfolio, is listed as 100 shares owned, even though, like I said, this put has not necessarily hit the deadline for me owning these shares yet. But I'm counting it because I'm going to continue to write cash secured puts on Williams-Sonoma until I add the 100 shares into my portfolio. That cash will remain on the sideline. And I'll be honest, I don't mind collecting more premium if it doesn't hit on the 12th, right? I'll just roll it to the next Friday and try to collect more premium again, and then use that money to add back into the portfolio, right? It's a way to add income into the portfolio while trying to get a position at the price that you want it at. I think I beat that to death, so we'll continue on. Now we'll go through the sector weights in the portfolio. Communications currently makes up 9.17% of the portfolio. Consumer discretionary makes up 8.53%. Consumer staples makes up 6.20% of the portfolio. Energy is sitting at 7.81%. Financials currently makes up 11.28% of the portfolio. Healthcare is sitting at 13.16%. I believe this is now the second highest position, the healthcare position, as we added Pfizer back in, right? Industrial sitting at 8.02%. Technology sitting at 9.19% of the portfolio. Materials at 11.99%. Utilities, no utilities, waiting for a pullback on a couple companies there. REITs and real estate still makes up the largest piece of the pie at 14.64% of the portfolio. And to be honest, it's starting to get a little heavy on that. I don't really like any one position to be over 15%, so I'll probably try to focus on some of these smaller positions. You know, I'd really like consumer staples to pull back so I can add to Kraft Heinz or Procter & Gamble. Consumer discretionary, Williams and Sonoma helped me build this one back out, but I've got a couple other in that sector that I'm looking at, like Best Buy. I'd like to add into the portfolio at the right price. This one here, energy, I've got a couple of companies in my portfolio I'd like to pull back. EPD is one of them. Enterprise Product Partners, I'd like that to pull back so I can add to that position a little bit. Over here in industrials, bringing out Whirlpool knocked this one down a little bit. So there's a couple companies in the industrial sector that I'm watching to see if they hit the right price. Technology, I'd like to add to my HPQ position. Hewlett Packard and my Cisco position, I'd like to continue to add that. So I want to try to even these out a little bit and maybe not hit as many REITs, but it is hard to not invest into the sectors whenever they are down and where I see value in the market. So trying to keep the overall pie pretty evened out here, but also take advantage where the market dips. So you can see here also this gives you the monetary number here off to the side. So if you want to take a pause this and go through how much each position is worth as far as dollar value of the portfolio, it's over here on the right. Now this is where I'll show you exactly what my portfolio, the positions I own in the portfolio, how many shares, whether I'm up or down in the portfolio. Full transparency here. I want you to see what I'm doing so that you can understand that this is a real portfolio that I build out every week and I track. And that if some guy who grew up in a double wide trailer can do it, you can do it as well. So as I always go through the tickers right here, all the companies there, how many shares of each company I own, the current price as of the close of business on the last Friday, right? So May 5th, that's the close of price that day. Market value, what it's currently worth is just total shares times current price. Average cost per share, this is my average share price, right? Purchase price, how much I purchase it for is just my average price times how many shares, and whether I'm up or down, my total return. In the red means I'm down. If it's black here, then it means I'm in the money. And percent return, so same thing. If it's red, I'm down. If it's in the light green or green, it gets greener as you go higher up in percentage, right? So that's this column here, percent return sector, what sector it falls in, whether it's a quarterly, monthly, or semi-annually payer. That's what these three columns are for. What the current dividend yield is, again, as of the close of business on Friday, my current yield on cost, the portfolio weighting. So the previous slide, we saw the sector weightings. This goes by each position. Ally is currently at 3.8% of the portfolio. Bank of America, 7.848. You can walk through that if you want. The estimated annual income column here, that's one of the most important in my opinion. What payout months it falls in, what the current dividend growth is, right? And then the 15% of the 52-week low, I added this in. So I am comfortable adding to the position when the stock price is below 15% or below my cost basis, because if you'll notice, sometimes my cost basis doesn't align with the 52-week low. So I'm looking for it below that if my cost basis is, or under my cost basis, right? Now, total shares is sitting at 3,708.912 shares total. Market value is sitting at $133,651.62. My purchase price is $136,298.98. So I am currently down $2,647.35. That amounts to 1.94% in the negative. Current yield sitting at 4.938. My yield on cost sitting at 4.842. And in my opinion, this is really what it's all about. The passive income provided by the portfolio in the form of dividends. So the dividend estimated annual income sits at $6,599.92. And if you recall from last week, it was actually about $6,730 and some change. So that's the $130 that we're in the negative right there that we lost in passive income. So we'll work over the next couple of weeks as we add back into the portfolio new income and potentially write some more options. We'll work to increase this back and get back on track to where we need to be. But again, the snowball keeps on rolling along. So that is what it's about. And then dividend growth currently sits at 7.92%. This actually went up a little bit, which was part of the logic behind picking up Williams-Sonoma. There you can see the Williams-Sonoma position. Like I said, there is a cash secured put on this one. So I am including it in the portfolio update because I will continue to roll that cash secured put until I get these 100 shares of Williams-Sonoma, right? Well, that is really it for this one. Hey, if you guys would hit the like button, share with anyone you think might find value in the content, drop a comment down below, let me know what you think of the video, and don't forget to subscribe to the channel. Really does help me out doing all those things, and hit the notification bell as well so you're notified whenever I put out any new content. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Hopefully, you're on your own journey as well. Join the vested interest community. Again, trying to build a like-minded community of dividend growth investors to share our experiences maybe things that we've done wrong in the past, mistakes we've made, stocks we're watching, stocks in our portfolio, ones that have done real well, ones that have not done so well, stocks we're looking to sell out of, and the reasons why. All that information, want to try to share that, and so that we can, like I said, build a community of investors and carry along this journey to get together and hopefully get to financial freedom. That's what it's all about. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. As investing involves risk and money, you should never invest any amount you're comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice counsel of a certified financial advisor.